Hello, everyone. Welcome to the Talks with the ARC Trust webinar series. My name is Sarah Geis, and I am the Senior Director of Engagement for the ARC Master Trust, a program of the ARC of Indiana. We want to thank you all for watching our webinar series. And as a reminder, all of our webinars are recorded and are available on our website to view at any time. To see this webinar again or to view others in our series, you can visit thearctrust.org and click on the webinar and videos button in the banner. In today's webinar, we will be talking about two of the ways that some government benefits determine who qualifies to receive those benefits: income limits, or restrictions on how much you can make, and resource limits, restrictions on how much you have in financial assets. When we think about government benefits that are available to individuals, we can break them up into two categories: entitled benefits and means-tested benefits. Entitled benefits are the ones that individuals have contributed to while they were working through their taxes. For example, because I am working, there are certain benefits that I'm entitled to because I paid into these programs while I was working. These benefits can include Medicare, Social Security Retirement, and Social Security Disability Insurance, or SSDI. Means-tested benefits are the benefits that a person receives because they've met the eligibility requirements for that program. These programs are based on need, and each program has specific income and/or resource limits that an individual must stay below in order to receive that benefit. Medicaid, HIP, SNAP, HUD, and SSI are considered means-tested benefits, and these programs all have some form of either income limit, resource limit, or both when determining who is eligible. An income limit is specific to how much someone is earning. This can include your gross earnings, net earnings, and whether the program is looking at earned or unearned income. Resource limits are how much you can have in financial assets or other assets. You can also think about a resource limit as an asset limit, as these phrases are sometimes used interchangeably. Income and resource limits vary by government program, and it's important for you to know what government benefits you're receiving and the specific income and/or resource limits those programs have. So in the last slide, we talked about how income limits can include both unearned and earned income. This table shows how some agencies like Social Security and Medicaid differentiate between unearned income and earned income. Each program can also recognize income sources that are not considered income by other programs. For example, someone who is receiving a Supplemental Security Income or SSI benefit, SSI does not consider the SSI payment to be counted as income. Some forms of Medicaid do consider an SSI payment to be counted as income, while others might not. Before we go to the next slide, we want you to know that some of these programs do view income differently. At the end of the webinar, I will reference some additional resources on how to navigate income and resources for your specific situation. Now let's take a look at some of the income limits for various Medicaid programs. The Medicaid programs listed here are ones that we at the ARC of Indiana see the most frequently. It's important to know that there are over 30 different Medicaid programs in Indiana. Based on your income and your situation, Medicaid should be placing you in the program that best fits your specific situation at that time. For HIP, HIP uses what's known as a modified adjusted gross income, or MAGI calculation, to determine if there are income sources or payments that can reduce your lower your monthly countable income. Typically, though, for HIP, individuals can earn up to 138% of the federal poverty level to qualify, and this is income counted from all sources. For an individual to be eligible to be a qualified Medicare beneficiary, this is when Medicaid and Medicare both qualify for the same individual. When someone is earning 100 to 150% of the federal poverty level, Medicaid will pay Medicare premiums and copays. When someone receives 150 to 185% of the federal poverty level, Medicaid will pay for Medicare premiums. For individuals that solely receive Medicaid disability benefits, they can earn up to 100% of the federal poverty level per month from all sources. But if individuals also receive a Medicaid waiver and receive Medicaid disability benefits through the waiver, there is a special income limit that applies. Individuals receiving a Medicaid waiver, like the Family Support Waiver or CIH waiver, they can receive up to 300% of the max SSI rate each month. This year, that is $2,982 per month from all sources. There is also a Medicaid program that is designed for people who want to be able to work but need Medicaid level health coverage or Medicaid waiver support in order to do so. This program is called MedWorks. Med stands for Medicaid for Employees with Disabilities. Individuals who are receiving Medicaid and waiver benefits through MedWorks can earn up to 350% of the federal poverty level from all sources. They do need to have been determined disabled by the Social Security Administration before qualifying for MedWorks. There is a monthly premium based on an individual's income, but this program does allow for someone to maintain their Medicaid benefits as well as their waiver eligibility. In this particular program of Medicaid, an employee-sponsored retirement savings plan, such as a 401k, does not count as an asset. We're now going to switch gears to Social Security. When we are looking at income in the realm of Social Security, we can look at it in two ways: income for eligibility reasons and income to determine how much you receive from Social Security each month. When Social Security is deciding if someone's disability is severe enough to impact their ability to work, they are looking to see if they can work enough to reach what Social Security is calling Substantial Gainful Activity, or SGA. And this SGA is one of the important factors for how Social Security defines disability. Social Security is important in Indiana because Indiana is a 1634 state. That means for adults with disabilities who need to be eligible for Medicaid disability benefits, in order for them to be able to qualify, they also need to have been determined disabled by the Social Security Administration. In Indiana, Medicaid bases its eligibility for their programming based off of Social Security's eligibility for disability. Now, in 2026, substantial gainful activity is $1,690 per month in countable income, or $2,830 in countable income if you are blind. And the phrase countable income is incredibly important. Just like we have our gross income and our adjusted gross income when we do our taxes, Social Security does the same thing when they determine if a person can work to substantial gainful activity. You want to make sure that you provide information about accommodations and supports that an individual needs to be able to work. They can use those accommodations to adjust the income that Social Security would count in determining if they can achieve substantial gainful activity. Let's take, for example, an individual named Joseph, who needs to take specialized door-to-door public transportation to get to work. Social Security would consider that. If Joseph needs more time to complete a task than another worker at the same job, that's called a production level, and that can reduce someone's SGA as well. If Joseph needs a job coach, that's also considered. So for example, let's say that Joseph is bagging groceries at the local store. He works 5 days a week and is making $17 an hour, and his monthly income is $1,700 per month. He needs to take door-to-door transportation, which costs $10 a day. And his boss knows that it takes him longer to do things, and he's only expected to bag 7 orders per hour, and maybe instead of the 10 orders per hour that another employee is expected to do. That is a 70 production level. Let's also say that his job coach works with him at a set number of hours per week. This is how Social Security could calculate his income to decide if he was working over SGA. We take his gross income, the $1,700, that's over SGA. We apply that 70% production level. We apply the transportation costs as well as the job coach. And at the end of that calculation, Social Security can only view $750 as his total countable income for SGA. It is really important to document this information so that you are able to supply that to Social Security. So that was a little bit on income limits, and now we will jump to resource limits. Resource limits are how much you can have in assets. This list includes information on what is generally considered as a resource by SSI, Supplemental Security Income, and Medicaid. Depending on which Medicaid program you receive, this could differ, or there could be other financial asset factors that qualify. Looking specifically at Social Security benefits, SSI does have a resource limit. The resource limit for SSI for a single individual is $2,000 and $3,000 for a married couple. Other Social Security benefits like SSDI, Social Security Retirement, and survivors benefits do not have resource limits. Some Medicaid benefits have resource limits of varying amounts, and others do not. For HIP, there is no resource limit. Programs like Medicaid Disability or Medicaid Disability through a waiver program or MedWorks, there is a $2,000 resource limit for an individual and $3,000 for a married couple. Individuals receiving Qualified Medicare Beneficiary or QMB benefits have a slightly higher resource limit of $9,950 per month. Though these programs have limits, there are ways to protect the financial resources or income to ensure that you maintain your benefit eligibility. To protect your financial resources, you could use a first-party special needs trust or ABLE account if you qualify. You can view the other webinars in our series to learn more about first-party trusts to learn more. To protect your income, there are, again, accommodations, expenses, and exclusions that can be factored into your gross wages to ensure that your countable income is below SGA. Some of these can include things like transportation, job coaches, or other supports. If you use accommodations or have expenses or exclusions that qualify, this can lower your countable income. There are instances where an individual might need to shield their income. For individuals who receive Medicaid benefits and live in a nursing home or institutionalized setting, or receive benefits from a Medicaid waiver, if their income is more than $2,982 per month, they will need to shield their additional income over this amount to maintain their Medicaid benefits. The way to do this is through a Miller Trust. Miller Trusts are different from special needs trusts or ABLE accounts, and they are only able to shield additional income for individuals in this specific circumstance. So throughout this presentation, I referenced that if you have specific questions that you should talk to someone about your situation. The person that I would recommend chatting with is going to be a Benefits Information Network Officer or Benefit Information Network Liaison. Sometimes this is called a BIN officer or BIN counselor. BIN officers are available through the Vocational Rehabilitation Office. BIN officers and liaisons can review your specific Social Security file to help determine work incentives when available while having the smallest impact on the benefits that you receive. Ultimately, the goal of the BIN counselor would be to help someone work off of Social Security benefits, but if that's not a goal that you see for yourself, they are still able to help you. Another great resource is the Center on Community Living and Careers through the Indiana Institute on Disability and Community. Their website is full of information and resources to help people navigate services, benefits, and employment. Thank you all again for watching, and we hope that you have found this informative. If you have questions or would like to learn more, please visit us at our website, thearctrust.org, email us, or give us a call. You're also welcome to join us on social media to learn more.